Good day. Welcome to the weekly roundup from Rand Swiss. This week, of course, we're still going to talk about the Russia issue, but we're going to talk about as well a prediction from Deutsche Bank about a recession in 2023. We're going to start off looking at a bit of interesting news that came out this week. Elon Musk took a percentage of Twitter. He basically bought just under 10% of Twitter, making him the largest shareholder. He's gotten an agreement from the company to get a board seat for the condition of not basically taking control of more than 15% of the company, just about. This is an important move because it does indicate that some of these tech companies that have been recently under a bit of pressure because of some politics, some inability to kind of extract true value from their operations, may be ripe for some kind of activist investments. It is of course unusual in the tech sector for a company like Twitter to be around. Many of the tech companies like the Facebooks and the Googles of the world have special classes of shares that give the owners undue voting rights. In Facebook, basically Mark Zuckerberg controls Facebook irrespective of how much anyone else owns of the company. That being said, I do think this is an interesting move. It does show that there is some shakeup in the tech sector because, for the longest time, the tech sector has been rather profitable, rather, attractive as an employer. And that just kind of strangely enough has turned into a negative because what's happened is employees are so used to getting all these perks that they have a lot of power in these companies. At the same time, the companies aren't really out there maximizing profitability because of the fact that they have this, cash cow effectively. And so they often sacrifice, optimal profitability for, some other political or other measures. For instance, look at Twitter. By far the biggest attraction on Twitter is Donald Trump, or what it was Donald Trump. He's been off the site for almost, a year and a bit now. He's since January 6th last year, he's not been able to get on Twitter because they've kicked him off. And if he was back on, you would see him as a very attractive, follow at least on the company. Love him or hate him, he's interesting. So that is one of the changes we are seeing in the tech sector at the moment. Another bit of news that came out this week, of course, is what's happening in the Russia-Ukraine situation. It seems that there is a really big development with regards to human rights abuses in that particular war. There was a town called Bucha, in which apparently the Russians did massacre quite a number of people. There is evidence of bodies, satellite footage of dead bodies on the street. People were killed with their hands tied behind their backs, that kind of stuff. And this takes things to a new level. One could imagine a few weeks ago if Russia withdrew, back to probably the borders they got just of 2014, Crimea, and leave the rest of Ukraine alone. It might be a way for them to get some kind of agreement from the Ukrainians as well as the allied parties, the NATO parties, for a significant reduction in sanctions. And that's much more difficult when you believe that the Russian, command is, responsible for human rights abuses on the scale of what we saw in Bucha. That basically the only way out for a country in that situation is probably going to be, regime change effectively. Not just Putin, but maybe some of his significant advisors, deputies, and so on would have to go in order for the West to treat it as a normal country again. That is very difficult to imagine in the current environment. So it does mean that it's much more likely that this situation in the Ukraine goes on for a bit longer. And in China, we continue to have lockdowns, in Shanghai and other, major parts of the country. It's over 100 million people in some form of, restriction at the moment. And lockdowns in China are not like lockdowns we had in South Africa. Even South Africa was pretty tough, but it was nothing like what they have in China. In China, if you're locked down, you're locked down. You're in your house. You're not leaving that house. You're not even going to the shop to buy food. So there's people out there that are suffering, difficulties obtaining food because, you have to get the thing delivered to you. And at the moment, the infrastructure does not quite allow you to service a city as big as Shanghai by going from apartment to apartment, just basically making sure everyone has enough food to eat. So it's a huge issue. At the same time, many companies, as you know, are based out of Shanghai, major transport hub as well. So we are likely to see some kind of supply chain issues coming from the Chinese over the next few months or so, because even to resolve things the next week or so in terms of the COVID situation, it's not going to be back to normal for quite some time, and there'll be backlogs to be worked through. Now, regarding this particular thing in China, I was pretty concerned about why exactly the Chinese were doing this. It doesn't make sense to shut down a city like Shanghai, one of the biggest cities in the world, the center of the Chinese economy, etc., accounts for 3 to 4, I think, % of the Chinese economy in total. And I saw kind of a reasoning that I think is quite interesting. Apparently, what the Chinese have done over the last year, but when the rest of the world was effectively coming to terms with the fact that they would have to live with COVID, the Chinese have effectively gone out and they've gone to a situation where they have a COVID zero policy, and they were using that differential. The rest of the world has basically had to live with COVID. Why we in China are able to control the thing entirely? We have a COVID zero policy or zero COVID policy. One case is too much for us. That is kind of backfiring on them now, because for them to reverse the position, to go to a position of, okay, we have to learn to live with COVID, would be almost like admitting that the foreigners were right and they were wrong, which is very difficult for the country to admit. And that's one of the reasons that they're actually going through this particular thing at the moment. So that's the Chinese. Expect more supply chain issues from them, in addition to the other stuff that we've been experiencing for the last little while. Now, looking at the big story of the week, at least from our point of view, Deutsche Bank came out and made a prediction about a recession in 2023 for the US. I am pretty sure that's quite likely. When the US has an unemployment rate below 4% and an inflation rate above 4%, unemployment is about 3.6 at the moment, inflation is close to 8, so it's well above those levels. The chance of a recession in the US within 2 years is about 75%. I'd put it even higher right now. The reason being is quite simple. In that situation, you've got to control inflation. How do you control inflation? You raise interest rates and slow the economy down. That usually results in enough of a slowdown to cause a recession. In addition, we have a number of other factors. We have the yield curve flirting with inversion. Of course, it hasn't gone fully into an inverted phase, but it's flirted, so that obviously indicates that it's close to having a problem. And at the same time, we are seeing things like oil prices, commodity prices, rising, which is obviously negative for growth as well. When oil prices rise by, I think, more than 50% in a period of 12 months, the US has a higher chance of a recession. So looking at all those factors, it's quite likely that we can have some kind of pullback in the next year or so. Now, Deutsche has a very mild recession predicted. It's something like second half of next year. Unemployment, going about 5%. I would think something closer to 10% might be, something we could be fearing more likely. The stock market dropping by 20%. I think, the last two big pullbacks we had, COVID as well as 2008, 40% was more of the level in which the markets pull back. And they have this particular recession being quite, mild. They're not the only ones that move towards a high chance for recessions, but they're the only ones that have gone to basically a probability of a recession, as opposed to some of the other places that are looking at a recession as a good chance of happening. Now, with regards to the situation in Deutsche Bank, we are looking at a mild recession. We are also looking at a pretty quick recovery from thereafter. I think that they are pretty a bit too optimistic on this regard. A number of factors to be looked at. Firstly, looking at what they are looking at as the highest Fed fund rate. It's right now it's 3% or so. Inflation's at 8. If you cut inflation in half, it's still going to be above what people are predicting as the end cycle of the Fed at the moment. That means that inflation is going to be higher than interest rates. There's still going to be negative interest rates, even with the peak of interest rates that people are talking about. I don't know if that's going to be enough to bring inflation under control. If you look at what Paul Volcker had to do in the 1980s, he had to put interest rates up to quite extremely high levels. I mean, double-digit levels. It caused a significant recession. Twice effectively, because the first time didn't work well enough in order to get inflation under control. So I think there's a significant chance that the US government has to go much stronger than anticipated. By the way, the EU has also come out with some inflation numbers recently. They've gone 7.5%, a little bit lower than the US, but still, 7.5, 8, 7.9%. We're talking about very, very high numbers here. And so they are also likely to basically be embarking on quite a strong, interest rate hiking cycle. But look at what their expectations are. Their expectations are for basically just breaching 1% in the next year or so. 1% versus 7.5%. That's a differential of 6.5%. A negative real interest rate of 6.5% is extremely expansionary. So yeah, it remains to be seen what's going to be happening with regards to that. I personally predict that not only is the recession more likely than anticipated, but the severity is also going to be significantly higher. And like I said, the other banks are moving towards this level. We're talking about companies like Goldman and so on, moving from 25% chance to a 35% chance. So I think they are basically kind of slow walking the inevitable. I think we are probably going to go to a recession in 2023, maybe even starting this year, depending on how things turn out. And we are certainly going to experience higher than 5 or 6% unemployment in the US. And we're probably going to experience much more than a 20% drop in stock valuations as well. Thank you. And I'll speak to you guys again next week. Cheers.